Get going for the next session. I know we all want to hear about how artificial intelligence might impact the industry and what's happening in that area. And we have just an awesome speaker and panel. So if you could come in and get seated, we'll get started in just about 2 minutes. 2? Yes. Okay, we're going to get started. I have the pleasure of introducing Evangelos Simoudis. As I watched the pitches and I saw all of the activity in the areas of claims and underwriting and how technology can be used to streamline it, there's clearly more that can be done in the area of artificial intelligence as well in those areas. And our speaker today is the author of a book called The Big Data Opportunity and Our Driverless Future. He's a recognized expert in big data strategies and corporate innovation. And he's going to give us a keynote address on artificial intelligence, followed by moderating a panel on the same subject with some terrific participants. Evangelos has been working in the Silicon Valley for 25 years as a venture investor, entrepreneur, and a corporate executive. And prior to this venture investing and advisory career, he served as the president and CEO of Custer Analytics and a vice president of business intelligence at IBM. He has, I think I've got that right, he has a PhD in computer science from Brandeis University and a BS in electrical engineering from Caltech, so certainly very technology-oriented, and is going to lead us in a discussion of artificial intelligence in the insurance industry. Evangelos?
So thank you very much for the invitation to present here, and I'd like to start by thanking Grinnell Mutual and Grinnell College that made this session possible. Great support. And I also wanted to let you know that in your bags you may have seen a page that we have with a number of resources around artificial intelligence. If you get more interested after the presentation and the panel, there's also a website with a URL, aibeginning.com. So it's great pleasure being back in Des Moines. Des Moines is the city where I landed 40 years ago when I was coming from Greece to start my journey in the United States. And this morning, I walked from the hotel to this venue, and I came to realize why I moved to California 2 years after I came to Des Moines. By the way, this really poor joke, today's AI systems would not be able to understand, because understanding it involves a number of different types of knowledge, which we'll not get into, but just to give you an idea of where we are today with regards to AI. Okay, let's move on. So the positive and negative impact of AI on work is real and is already happening. It has the potential to affect large parts of the labor force. And I want to show this by discussing examples from two industries I'm very familiar with because of my investment activities. In both cases, I'm able to see both the challenges we will be facing because of the job losses and job degradation as a result of AI-driven innovation, but also the opportunities that will be created because of these technologies. So the automotive industry, an industry that I studied for the past couple of years as I was writing the book, today employs approximately 7 million individuals in the US. In vehicle manufacturing, sales, and maintenance, we are already seeing the accelerating use of software and hardware robotics. Software robotics, you may also know them as chatbots, and that are leading to job degradation and loss. In automotive manufacturing, where we're employing about 2 million people, hourly wages hover around $25 an hour. Robots used today by the automotive industry are costing about $10 an hour, and the robotics that we will deploy by 2030 will bring this down to $5 an hour. So this price differential leads not only to job losses, but even to wage stagnation and wage decreases. Direct-to-consumer sales models, similar to those employed by Tesla and more recently by incumbent automakers like Cadillac, combined with software sales tools that enable personalization and automatic selections, are leading to changes in the type of people employed by car dealerships, decreases in sales staff, and also the closing of dealerships. And the increasing automation in vehicles, culminating in the introduction of autonomous, connected, and electrified vehicles, will lead to cars that are able to self-diagnose and even repair themselves, changing the vehicle maintenance profession irreversibly. The good news is that to make all of this possible, we will need system designers, robotics technologists, and data scientists and engineers, just to name a few of the new employment opportunities that will come as a result of this transition. 2 weeks ago, as an example, GM announced that they want to hire 1,100 data scientists and engineers in Silicon Valley alone in order to further develop their autonomous car program. Let's now look at another part of the value chain, the one concerned with the financing and insurance of vehicles and drivers. Financial services and insurance companies employ approximately 1.3 million people, though not all of them associated with transportation. The introduction of new types of data from the vehicle, the driver, the passengers, and the transportation infrastructure, in combination with new risk assessment and underwriting tools and models, and direct-to-consumer approaches, some of which, by the way, you heard about from some of the startups that presented earlier, are leading to many job categories in these industries to be partially or completely automated. The job opportunities in these areas involve data science, human-machine interaction specialties, and software and system engineering. Finally, as we consider the transportation aspect, we see a risk of another 1.3 million jobs relating to the people working as taxi, limo, bus, and ride-sharing drivers, just in the US being a risk. Autonomous vehicles will lead to job replacement that will be driven by the need of transportation companies to better control costs as well as better control the consumer experience. The opportunities in this area will come from the massive transportation and energy infrastructure overhaul that will need to take place in order for such technologies to be fully deployed and utilized. As we look further into the transportation and logistics industry, the automation that will be brought by the use of autonomous vehicles will cause job losses among the 2.5 million delivery and long-haul drivers. But on the plus side, it will alleviate the extreme problem of finding and retaining long-haul truck drivers, and there are several thousand job openings today in that area, and retention is extremely hard even as salaries increase. Let's now move to our second example. The advertising industry is about $500 billion a year and deploys about 500,000 people. Over the past 12 to 15 months, we have seen a growing portion of the activities that comprise the industry's value chain, including writing and design, being partially or fully automated. The automation is leading at best to collaboration between humans and intelligent tools. But even when we talk about such collaboration, many of these jobs can now be done with lower-level personnel, something that advertising agencies are already taking advantage of in order to improve their operating margins. However, the use of such intelligent tools has increased the demand for people performing research, strategy, and planning. In other words, positions that require strategic or creative thinking that are hard to automate, at least with today's technology. Digital technologies, or what we're starting to refer to as digitalization, are the common element between the big transformations that are taking place in these two industries, but also in many others. Digitalization follows a well-understood pattern. It impacts every aspect of the value chain. It compels us to deeply understand each process we digitalize. And finally, it leads to data acquisition that drives the automation of each process. Understanding the process and acquiring data are the key points for intelligence or AI-driven technologies. Now, digitalization is driven by a variety of technologies. It is important to understand that the innovations impacting work are the result of blending these technologies and combining them with data and new business models. So, for example, what we are seeing is that technologies such as cognitive and AI systems, robotics, nanotechnology, are combined with business models such as the sharing economy in autonomous vehicles to produce the effects we are seeing in transportation jobs. Such innovation-driving combinations will continue and even accelerate. The big question remains how fast the adoption of these technologies will be and what will be a long-term positive and negative implication to work across every industry. We're just now starting to comprehend this at an individual, industry, national, and global levels. Perhaps the most impactful among the digital technologies is artificial intelligence, or AI. You heard the term a lot of times, I think, today, but let's dive in a little bit to see what it is. So AI is the science and engineering of making intelligent machines. Plain and simple. Now, AI is not new. It has been around for over 50 years, and it comprises, by the way, this fact, to my surprise, is known by relatively few people. I'll give you an example. About a month ago, I was giving a talk in Seattle to a group of money managers, and when I asked the question, how many people know that AI is more than 5 years old, less than 10 hands went up. And when I asked how many people understand that AI consists of many different disciplines, only 1 hand went up. So just to talk a little bit more than about the composite fields of AI, first we have knowledge representation. And knowledge representation is the discipline of describing a knowledge base, so everything I know that can about something, so that it can be understood and utilized by a machine. For example, if I describe the characteristics and feature of an automobile. The second area is reasoning. So reasoning enables a system to make deductions using such knowledge bases. So for example, if I want to use a set of symptoms to determine whether a patient has a specific disease. Building or reasoning is planning, which is the ability to achieve goals through a series of actions. So if in autonomous cars, as an example, if we instruct a car to go from Union Square in San Francisco to the Palace of Fine Arts Museum, there's a series of actions that the car will need to take. This involves planning. Next is communication, or natural language processing, though that enables the system to understand what I mean when I type or when I talk. So when I type in my computer, where can I find cheap gas? That involves a lot of the use of natural language processing and communication. Next is perception, and one of the speakers before talked about how to use vision in order to make deductions. And it's not only vision, but also images, sounds, and other sensory inputs. So again, in autonomous vehicles, since we're building on this example, it is vision that enables the vehicle to understand its environment. And finally, machine learning. And machine learning enables systems to automatically extend their knowledge base without explicitly programming them. So I learned to distinguish between a moving from a stationary object. Now, AI surrounds us today, and I don't think we pay as much attention to it. So every time that you start a Google search, there is a lot of reasoning and planning that is going on in the background, as well as statistical analysis and learning. The Alexa that many of us got for Christmas, gadgets such as that, or the Google Nest thermostat are also examples of artificial intelligence in smart homes. Siri in iPhones and other assistants are, again, examples of chatbots. The personalization that we use every time we invoke e-commerce sites, such as Amazon's, it has a lot of artificial intelligence systems. The mapping applications that we use when we move around, such as Google Maps, again, uses extensively artificial intelligence. And more recently, the advanced driver assistance systems, or ADAS systems, that are part of the new generation of vehicles that allow them to park automatically or brake automatically. All of those involve a lot of artificial intelligence. Now, this is not the first time that AI is generating strong excitement. We felt similarly excited in the late 80s, and I don't know if I should be proud to say or ashamed to say that I was part of that wave at that time. And we got overly excited about the potential of the technology, and ultimately we were disappointed with the results. However, even based on the everyday manifestations that I just mentioned in the previous slide, this time the revolution driven by AI will be different because of a few things. First, we are now able to collect a lot more data, more and very easily. And this is due to this current generation of sensors that we are developing or have developed, as well as all the data that's collected by specialized data providers. During lunch, we heard about climate change. There's a lot of data that is collected in order to assess that. We also have very abundant and inexpensive both storage and compute power. We have it in our pockets with our phones, our homes, the cloud, but also in our vehicles. We also have broadband internet everywhere through 4G and soon 5G connectivity. And this third wave of AI technologies, led by machine learning in general and deep learning in particular, which combined with big data results in systems that perform narrow intelligence tasks. And I think you should keep in mind this narrow intelligence task. And this is why I was saying before that today's AI system will not be able to understand the lame joke that I made in the introduction. But this is why it's important that this process being automated are well understood, and they involve a lot of data. So in addition so we're now developing intelligent autonomous systems that produce results with high accuracy while performing tasks in high speed. And again, these are the narrow intelligence tasks. So in addition to the examples that I mentioned before, additional examples of that systems include the autonomous vehicles, various aspects of robots, both software and hardware, as well as portfolio creation and optimization tools that are increasingly starting to make their way into our lives. Now, AI-based automation in general and intelligent autonomous systems in particular accelerate the decoupling of productivity and employment. So we're becoming more productive without the need to add jobs. This decoupling has bigger implication for the developing world, where cheap labor won't remain the competitive advantage for long. For developed economies, it could mean bringing back production, but not necessarily the levels of employment we had in the past, because AI-driven automation leads to job elimination or job degradation. And it results in higher productivity per employee. We should note that for countries with low or negative population growth, this type of automation could be a blessing because they won't need to import workers to meet the industrial production or services needs. Now, the AI automation is impacting jobs from a broad set of industries, and there's a good news and bad news about that. On the good news side, through these technologies, we are creating new categories of computer-related cognitive jobs, as well as jobs for rebuilding or creating the energy and transportation infrastructure on top of which certain innovation will be based. Also, jobs in fields such as healthcare, architecture, design, and engineering appear to be safe for the time being because they involve broad intelligence, and we are not able to automate these jobs using the current set of AI technologies. Now, on the other hand, we are starting to eliminate several mundane and dangerous jobs. In this respect, positions in industries such as manufacturing, mining, construction, office and administrative, and many types of services are at risk. For example, today, 15 million cashiers, salespeople, servers and wait staff, and clerks are at risk, along with certain positions in accounting, auditing, and real estate. Now, the characteristics of the jobs being automated and being the target for elimination include well-understood processes, processes where the activities that comprise them have a lot of data, either data that has already been collected or data that can be collected through the sensors that I mentioned before. There's a high cost per human interaction, or the activity is dangerous. And finally, the technology for automation or augmentation is feasible. So because the impacted jobs involve diverse industries, it will become harder for mid-level workers to move from industry to industry. And today, we're automating tasks that require not only low-level positions, but also decision-making. And this is a big change between the previous AI spring that we had in the late 80s and what we are able to do today. As a result, we are impacting both mid-skill, blue-collar and white-collar jobs, as well as the lower-skilled jobs. And again, when we look at the future of work, these are jobs that define middle class in developed economies. So we need to pay particular attention to that. The effects of new AI-driven job automation are irreversible, but everything is within our control depending on how we approach it. We need to start thinking about the situation created by these technologies in a very different way. We also need to understand that every time we go through a major transition, such as the one we have entered because of these technologies, there's a gap that approximately lasts 20 years before the system adjusts and reaches a new state of equilibrium. So we need to realize that every population segment is being impacted and will continue to be impacted from this transition. But we must also appreciate that each segment can help the segments that follow it, that's helping the system reach the necessary equilibrium. Now, each segment will have different options and opportunities. Older segments will face harder choices. So I have focused particularly on the segments of 30 to 40-year-olds and 40 to 55-year-olds because I believe that they will face the biggest challenges. For many in this first segment, the 30 to 40-year-old, it won't be obvious what path to take to select professions and jobs that won't be automated in the future. The best they will be able to do would be to experiment and iterate quickly among the few options they have. However, they will be able to help their young children should they decide to have families in the midst of these uncertainties, because this is another side effect that we need to start worrying about. The second segment, the 40 to 55-year-olds, will have a difficult transition as many members will find it difficult or impossible to retrain and recapture that standard of living as they start either losing their jobs or having their original jobs degraded. In order to provide longer-term solutions, we must start thinking along three dimensions: education, employment infrastructure, and innovation and entrepreneurship. Education needs to be rethought in the context of each of the different segments. Today, our schools are not doing a good job educating our people for the future they will face. Many high schools don't provide the education students need, leading to labor force participation that is lower than in other developed economies. And it's one of the reasons why companies are looking globally for employees with certain skill sets. Today, the United States is at 88% labor force participation, whereas in 1968, we were at 96%. The estimate is that by increasing the labor force participation to 93%, we should be able to add about 10 million jobs. Now, we not only need to reimagine the curricula of the primary, secondary, and tertiary education to make them relevant to the professions that will be in demand, but we also need to prepare people of how to interact and collaborate with the intelligence systems we are building. We need to make education a lifelong and continuous activity rather than an activity of discrete steps taking place early in one's life. We must also push people to complete advanced degrees, as our future professions will require higher levels of knowledge, and we're already seeing this reflected in the salary increases between the people that have advanced degrees and those that do not. Organizations will need to hire what I call T-shaped individuals. These are individuals that have expertise in one important area, the column of the T, but also have understanding in many different areas and employ them in an interdisciplinary manner. This is the bar of the T. So designers and data scientists are examples of such individuals. We must look to create certain infrastructures to ease the impact these segments will feel during this transition and beyond. Measures such as labor repricing and the gig economy will prove short-term fixes for achieving full employment. Instead, we need new tools for the timely measurement and monitoring of technology's impact on jobs. We need to collect better data so that we can begin to understand the nature and magnitude of the opportunity and of the problem. Where are we missing opportunities? Where are we not taking the risk seriously enough? We need to start creating better job mappings so that we can automatically and quickly identify positions that need to be filled using the automated tools at our disposal, and there are a lot of them today. At the same time, we need to prepare the population for increased mobility, even at a later age, so that they will be able and willing to migrate to where the jobs are. This may cause people to stop thinking about home ownership or other characteristics of middle-class lifestyle as we define it today. Additional employment infrastructure steps may include experimenting with wage insurance, for example, to guarantee that an employee will be paid a certain wage regardless of how much of the work is done by a machine. And think, for example, individuals that will be sitting in trucks in order to monitor the operation of a peloton of trucks as opposed to actually driving the vehicle. Along these lines, the European Union has also started experimenting with universal basic income and shorter work weeks. And these are, again, encouraging steps, even though they may not provide the ultimate answer. Finally, we need to think more carefully about innovation and entrepreneurship, words that are used so much today that they are losing their meaning. To that end, we will need to promote skills that narrow intelligence systems can't achieve, like ideation. And I gave you examples earlier from the automotive and the advertising and marketing arenas where certain jobs cannot be automated. We also need to promote skills achieved through machine augmentation and co-creation, such as financial advice. The machine can create the portfolio, but you still need the salesperson to be able to interact with the consumer. We need to promote industry collaborations to create new professions and promote innovation for employability rather than productivity increases. And this is the key to entrepreneurship, and this is why it is so important for large corporations to be promoting and working with entrepreneurs. Finally, re-engaging people with work to promote purpose, and in this respect, learn a lot from the culture and operations of startups. We find ourselves at an important crossroad. The technologies our species is developing might either hold the keys to unlocking human potential or to locking it up more tightly than ever. Indeed, they could even transform what we think of as human potential, given the startling new combinations of technological and human capabilities being devised. Something troubling happens when people become resigned to this inevitability beyond lost wages, routine, and a sense of purpose. Through AI-driven innovation, job insecurity is not inevitable. Machines could refine tasks without eliminating whole jobs. Change may be imminent, but its contours are hardly inevitable, depending instead on how we approach it. Thank you.
Thank you very much, Evangelos. That was fascinating. We can go a couple of directions here. He's offered to take some questions now, if there are some. Alternatively, we'll just move to the panel and do the questions at the end of the panel. So let me... For questions, yeah. So if there are questions on the subject of artificial intelligence, follow up on his remarks, raise your hand, or shoot me a private message, or post something. And I know it has been a kind of a quiet group today, but this is an extremely knowledgeable person. So, all right, I'll start then. As a longtime educator, we struggle a lot with what you talked about there. How does education, college and university education, have to change in order to produce people with the skills that that the industry is going to need? At Drake, we are particularly known for our actuarial science program. We have a strong marketing program. And we kind of decided, as this world is moving a couple years ago, that we were going to add data analytics, and we were going to kind of focus marketing on marketing analytics. But we're still struggling with that ideation, innovation, cross-disciplinary. Do you have any thoughts on what a model business school curriculum would look like to produce the sorts of things that business needs, and particularly the insurance business?
So I'll stick here so I can. So I think that the first mistake that we see, and when I say we see it in the companies that are come to be hired now, or in the startups that we fund, which over time become larger companies, is that people have a very set idea of what it means to finish a degree and then start their career, and they realize that a lot of these fields are changing so rapidly that they quickly find themselves outdated. So I think there is a need, as I have in one of the slides, for a much closer collaboration between industry and academia in order to not only identify what needs to be included in this new curricula, but also the curricula need to, as I said, be continuing over the life of the professional life of the individual. So I'm very encouraged by the massively online courses, the so-called MOOCs, because you see people from all over the world contributing, and it's a lot of times they represent a very quick way of coming up to a subject, and that's why I talked about T-shaped individuals. When I will tell you that when I was at Grinnell, having come from Greece, it was not obvious what the advantage of interdisciplinary work will be. And it actually took the 2 years at Grinnell plus the years at Caltech, which has a very similar orientation with a very heavy science overtone, to understand and appreciate that. And since that time, that has been a guide to my work, at least. I think that this interdisciplinary work will be important. People need to be open that not only to apply, let's say, the basic, let's say, computer engineering theory, but they need to combine that with biology or with economics and build these new models together. So I think the best thing that education can do today is to make students open up to these possibilities as opposed to just taking them down a predefined curriculum.
We've had a lot of startups in the room today and a lot of young companies here. And everybody's going to be facing the word AI and machine learning, no matter where they are, and it is becoming too much. If you were counseling a startup, a general startup right now, what should they be doing in the next 12 months to get themselves ready for their world to be impacted by AI?
So it is true that these days, unless the words artificial intelligence and machine learning are in an investor presentation, you have no chance of being funded, and that's not a joke. Look, I think that, first of all, it is important to understand what are the possibilities and what are the limitations of these technologies. And we look at too many startups that will come and talk about artificial intelligence and machine learning, and they think that because they have a body of data and a machine learning algorithm which they downloaded from some repository, they are able to solve the problem. And it actually, sometimes I go into these tutorial modes during investor presentations where I will try to impart to these founders what is really involved in building a system where AI may be an ingredient, may be a component, but will not be 100% of the solution. So for me, this is probably the best thing that startups can do today. I mean, I think it's important to understand the possibilities of the data. That's what I try to underline in my talk, and to understand that because of what infrastructures we have today through compute, through storage, we are able to get a lot of data, and we're able to process it in unfathomable ways compared to what we were able to do back in the 80s. But on the other hand, very much like what's happening then, we need to understand that these ingredients are not 100% of what is needed in order to bake the cake.
I was wondering if you could say something about where we are in terms of teaching values to neuronal AIs and deep machine learning. For instance, in the context of autonomous cars, you know, what we call death algorithms, what type of life to privilege in an accident situation, and who is liable, and how we program different cars to interact with themselves and take those decisions. So.
This is a very good question. Thank you for asking it. So we will have autonomous, just to put it in context, if I could, we will have autonomous vehicles fully functional within the next 5 years. And then the fun will begin, because it will take us probably another 10 to 15 years, give or take, in order to be able to put this on the road in broader use. And the major impediments are going to be ethics, exactly the topic that you talked about, and regulation. Who is going to be responsible? And you know, it's even more complex than you may think, because we have situations where automakers are taking a very vertical approach to develop, to fully develop an autonomous car, from the chassis to the brains of the car. But we have many other situations where a part supplier may create the brains, whereas the automaker may only create the brawn. And it's not clear whether we should be imparting, in fact, ethics that are local. So California drivers drive very differently from New York drivers. California drivers that are transplant from New York drive very differently in California than the California drivers drive. So these kind of nuances, it will be very difficult to start thinking how we're going to put them into the vehicle. Because again, I can tell you as a technologist that we can have autonomous cars that drive like Mario Andretti, okay? We don't want cars that drive like Mario Andretti and being autonomous, but the technology is there. So what is going to make the cars well-behaved and able to achieve the low accident rates and the safety that we're all envisioning with these kind of vehicles is to put the right algorithms in there and be able to control them. But there's some really hard choices that we'll have to go through. And again, I'll go back to my talk. These are areas where broad industry collaboration is necessary. This is not a problem that a Ford or a BMW will be able to solve by itself, or a Nationwide or USAA, pick up your favorite, will be able to solve by itself. This is a whole new ballgame.
Okay. Anyone else question? Or we should move on to the panel? Are you okay moving on to the panel? Okay.
Great. So, as I asked my fellow panelists to come up, I would say in my talk, I discussed 3 ingredients that lead to successful intelligence systems that can impact work. Thorough understanding of a process and its activities, available AI technologies such as machine learning, and then big data relating to the process. I also spoke about the new job opportunities that emerge as a result of this revolution. So what we've done, we have assembled a great panel to help us probe further these issues from an insurance perspective and address additional audience questions. So with that, I will ask, and I guess I need a mic. I won't drop the mic. So I will ask each of the panelists, starting with Louise, to give us a little bit of a background.
I'm Louise Billmeyer, and I'm with the Principal Financial Group. I'm the Chief Information Officer for our U.S. Insurance Solutions Division. And within the division, it's focused on employer-based insurance products, non-medical, as well as life insurance for our individuals and small business owners. You asked me earlier, why is Principal interested in artificial intelligence? And when you think about the movement around the consumer-based needs and the experience that our customers want to engage with us, make it more of an effortless type experience, they're really looking for solutions that are easy to understand. They want to bring value. They want to perform the service or purchase our products in the way that they want to have it. You're going to see a lot of movement more into the self-directed. Some of our customers may want that financial advice that's a human touch. At the same time, you might have individuals that may not want to talk to the human. They may want to do some of that on their own, but they still need very sound and quality advice. Another area would just be, really looking at your business model and transforming that from the aspect of refining your product offerings. So the more that you can gather information, you can refine the pricing of your products, as well as just becoming more efficient in ways to perform the transaction or meeting the needs of the customer.
Thank you, Louise. Hi, I'm Chris Augeri, the founder and CEO of DriveSpotter. Some of you may have met me a few moments ago during the GIA presentations. DriveSpotter. What we do is very simple. We take video analytics, and we take location and telematics data, and we assess driving performance for humans and for machines, which is part of why we went to Techstars Mobility last year after going through the GIA. We use this information and we send it back to fleets, and we send it to property and casualty insurance companies to help them understand how to reduce driver risk. The other interesting piece of that, though, is because we have semantic and location information, we can update maps. So what happens is we can, in real time, reduce risk for human or machine drivers, but then as a result, we get collective or aggregate data that updates maps, where some of our, so you can think of most of the leading mapping companies, Mapbox, MapQuest, Apple Maps, and we have various relationships with those. So for us, AI is near and dear, but to Evangelos' earlier point, it's an ingredient. So for instance, if we take stop signs, in order for a machine to recognize a stop sign, if we take at least supervised versions, then we have to give it a bunch of flashcards. And then the machine tells us what it thinks stop signs look like. But it's not always right. So then we have to give it more flashcards and more flashcards. So some of the jobs which we're helping create include having people tag images. Much like you would do a CAPTCHA when you log on to a site. It's the same process, just at scale for a commercial operation. And with that, we will go on to Anand.
Thanks. Hi, everyone. I'm Anand Rao. I'm a partner with PwC. And I think to your question on why we are here or why I am here, I started my career in artificial intelligence way back in 1985. Did my PhD and then went on to the area and worked there for 15 years. Primarily, those days, it was defense, aerospace, NASA, were the kinds of people who were using artificial intelligence. And as Evangelos was saying, then the AI winter set in, and I was one of the deserters of the AI winter, moved into management consulting, and pretty much spent my time in financial services and insurance. Almost for 10 years, I was somewhat away from the AI world. When the two worlds started converging around about 2010, when the whole big data, analytics, AI started coming, and I got more involved in AI in financial services and insurance. What we do within PwC, within my group, I would say are two specific things. One is essentially helping our clients, insurance clients, financial services, banks, asset managers, and so on, try to understand what AI brings. So there's an entire spectrum of AI that Evangelos was talking about, starting from robotic process automation, natural language processing, machine learning, deep learning, agent-based models, simulation. There's a whole range. And we help our clients see what kinds of problems they have and which technology is best suited. Again, there's quite a lot of hype there, and we are trying to see what is really a technology for today versus a technology that might be feasible a couple of years from now. So that's something that we do. And in addition, we also have an innovation group which essentially does very fast prototyping, literally a month. So 1 month innovation projects. And we take unstructured data, video data, image data, and see how we can use that for insurance clients and for other clients. So we have been involved in a number of initiatives around creating digital twins. So customers which are, if you like, resident in a simulation system, or creating a robo-advisor, or essentially looking at drone data or image data to do claims. So that's the kind of thing that we do.
Anand, let me start the first question with you. So we're able to collect a lot of data, as I mentioned before. What types of data do you see insurers collecting in order to more accurately assess risk, particularly these new types of risks that we're talking about, that automation is introducing?
Mm-hmm. Yeah. What I would say is, I think everyone is very familiar in the insurance industry about using data. So that's not something new. But the data that we have used typically is been very structured data in databases. For example, that's something that everyone knows. If you start from the most simplest one, there's quite a lot of documents and paper that we use. And of course, as we were just talking earlier, those things have been digitized. So now, if you have it digitized, yes, it's all there as images, but we still have human beings looking at those images. What we are doing now is moving to the next stage where you can take any kind of a PDF Word document and extract structured information. You can take a policy document and then extract various terms and conditions, various coverage limits. So you can extract useful structured data which can go into your marketing or underwriting or claims or any of those functions. So that's at the text document level. Then you can go further, and I think, as you were saying, image data. So in autonomous car, or even without going into autonomous cars, just having images of car accidents. And we can take those images and you can build deep learning systems which can essentially categorize those into different classes of risk or damage, for example, in the case of claims, where you can identify the make, model of the car and what type of severity of the accident, which then allows you to essentially draw the claims immediately. So that's image data. Then you can go into audio data, where you can go into the recording of the call and again build a model on what constitutes a good sales call from an insurance agent to a person. What are the characteristics? How do they speak? So all of those is what we would say that we can use, and we are using in these areas.
Louise, anything to add?
So when you think about just making a decision to buy life insurance, one of the things you really want to have is a really good rate, and you want to maybe think about it from the aspect of how healthy you are and maybe not how healthy you are. So when you think about just gathering that data, additional information we'll be looking at is what people wear, their wearables, their activity tracking, could be biometrics, really ultimately starting to get into the electronic medical records. But I think the key thing here is that has to still be at the consent of the customer. So they're making that decision to give that information to us, as well as trying to figure out a different way, covertly, them not knowing we're getting it. So it'll be a partnership of what are they willing to share with us and how can we use that to better price that product for them.
Yeah. Chris, let me ask what I think is a hard question. Who will be responsible for collecting this data, and who will own and manage it?
Good question. And there's a difference between the raw data and then the extracted structured data. So for instance, we collect clock, we collect location, we collect engine RPMs, and then, oh, by the way, there's some cameras. That raw data, at least for us, is actually owned by the customer and perpetually licensed to us, which puts us in a position to then sell aggregate redacted versions of that data to insurance companies, mapping companies, marketing companies, et cetera. How many cars go through this intersection? What's the average rate of speed in this school zone? Those kinds of things. For us, when we do that, one of the things that happens is, say that the fleet says, keep this data for 90 days, but after that, dump anything associating us with the raw data. When we do that, we actually separate time and location. Part of that has to do with subpoena concerns. We've got terabytes, let's say, of video data, and a judge says, well, I know that you had a camera in this truck 4 months ago. True, but 3 months ago, we took that and we said, here's the video, you can index it by time, or in another database, index it by location, but you can't do both simultaneously, and so it's unreasonable to have somebody hand watch these terabytes of data. So that's one of the things that we do within DriveSpotter. The fleet no longer owns the data at that point, in some sense, because we take away the privilege of reverse indexing it for them as well. Now, in the meantime, during that 90 days, there's data sitting on the vehicle that may never have been pushed back to the server because we can't transport every single frame. Too much money for, via the cell network. So the fleet can reach back in during that time, but then after that 90 days, it's gone. So part of that answer is really, it's not just who owns it, how long do they own it, and then how do we protect it during that period of ownership. And it gets real tricky real fast. We as a startup wrestle with it every day. Yeah, we could talk quite a bit on that one.
Louise, I had a question for you. How will corporations integrate these data sources? I mean, we talk about a lot of different data, not only in volume, but also in variety, some of it within the corporation, others out on the infrastructure. How would that integration, and how can we automate that process if possible?
Well, I think a lot of third-party data aggregators are out there today, and that's some of the things that they're trying to perfect and make that available, similar to what has just been described, where Chris is saying he's gathering it, making it available to others, may end up helping manage when you I think you could probably call it de-identifying it. But so we'll be looking a lot at third parties, as well as our own data that we'll collect and merging it together. So part of that gets back to something Chris said. You're going to take certain data and store and manage and integrate and interface it across, just different business capabilities or functions, and there's others you're not going to store that.
So do you find, as we are moving into this world of highly intelligent systems or more intelligent systems in what we do, do you see a larger need for collaboration among small and large companies compared to what we had before? Because
Absolutely.
Again, data integration is a big problem, has been with us for a long time, but now we're talking about very different needs for data, very different uses of data. So
Absolutely. I'd see great collaboration there. And you're going to have to, I think someone talked about just the ethics of how do you manage that information and protect the privacy and accord to the compliance of the regulatory obligations that many of those different organizations may be in, because they may not all be in the same industry. So I think we're going to have to work together and understand what's kind of the rules of engagement.
do you see that happening already, or is that an aspiration?
In pockets, I would say it's not starting yet, but I think in concept, people are talking about it. How they make it happen, and then, who's going to make what investments. I think we're still trying to work through that. So we're still trying to work as independent organizations, figuring out how to collaborate better.
Anand, what about your clients?
So in terms of the data, what I would say is, of course, we have had the traditional data, and then there's a whole lot of big data architectures in terms of Hadoop and so on, data lakes. So those two worlds are coming together. So vendors and everyone is sort of looking at integrating them. In addition, I think something that I think both Chris and you pointed out, people are also talking about not just big data, but fast data. So how we need to get that data and make decisions while the car is on. You're making certain decisions in the autonomous cars, or Amazon, or even when a client is online, you want the conversation to lead to the right lead. So if you're looking at real time, there is that fast data that you need to integrate as well. So that's where we are seeing the big, fast, and the traditional data all combining.
I have plenty of questions to keep this going, but I wanted to make sure that there are no questions from the audience, given the expertise of the panel. So I'd like to stop here for a minute, take a check of the room to see if there are any questions, and if not, then we'll continue.
I've been getting a ton of them.
All right.
So I'm going to start the sort of the consumer perspective. There has been, every once in a while something will pop up in the news about data that's being shared that maybe the consumers didn't know about. I think there was one just in the last couple of days where Unroll.me service had an email management system, and Uber was using it to keep track of Lyft. And there's been kind of an outcry about that. Do you think consumers understand where this world is going? And particularly for Chris, have you gotten any backlash from drivers who say, Big Brother monitoring my driving?
Three-part answer on this one. So for some of you may know about 2011, 2012, I actually gave a TEDx talk precisely on this topic. It was actually on healthcare and healthcare insurance and wearables, Fitbits coming onto the market. And it was all around, if you're going to ask a consumer, in particular in this case, to give up privacy, then there has to be a proper incentive. There has to be something of value that's tangible to them. It could be money, it could be airplane miles, it could be better health, but there has to be something tangible that you can offer. So that's a philosophical TEDx talk. You can look it up on the internet, or just email me, chris@drivespotter.com, and I'll get that to you. Second answer, going into DriveSpotter, we actually started out as a driver-facing and not a road-facing company. We very quickly pivoted, in part because of privacy concerns. With drivers, we actually are, and another way that we address that concern, we're the only app on the market that provides drivers the ability to add audio commentary to their video feed. So that say that I just got cut off by this red rental car, they can actually add their audio right to the video feed. It gets pushed to the fleet, and when their fleet manager goes in and looks at the hard brake data, that commentary is already there, and the driver, of course, has already preemptively self-exonerated themselves. The third is that we tend to stay away from things that could be viewed that way. We have video of the road. We have license plates in that video. We are not currently doing anything with that information, identifying people. There are companies that do that. We're not one of them. With that.
Yeah, I have actually said many times that consumers are giving up their privacy one convenience at a time, and sometimes knowingly, sometimes unknowingly, but it's going back to
well,
the
and it's
value.
the convenience, right?
It's the value
And it's communicating that incentive, what are they giving up?
Yeah. Another question, I'm sorry, I cannot see. Another question?
I'm over here.
Great.
So as you just said, consumers, when they get the right incentives, they will volunteer data, so that translates into better pricing and better products. And we're going into a world where a lot of the products are not segment-based anymore, but very personalized. So in the insurance industry, that generates a big issue, because we may end up with people that need the insurance and cannot afford it, because our models will be really able to assess risk in a way where we're going to price the worst drivers, and there is disincentives to that type of behaviors that some people may not be able to control. And I think on the health insurance and on the genetics, that's a big topic. So once we go into IoT everywhere and AI using unstructured data, how do we end up mapping those individuals in a way where big data cannot harm them?
I'm assuming I'll take that one, Elise, to start. So we, of course, in the healthcare market, we have Obamacare and/or whatever it's currently correctly politically called. In the car insurance space, we don't have that, right? Part of what we do when we deliver our data to insurance companies is help them segment that risk. And we typically will present it that way. This is the types of coverage we can offer you for this price point. So we really try to stay away from them not being able to offer coverage. It's just that you're only getting this much coverage with this ridiculous deductible and this more ridiculous premium, right? So that's how we present the data to the insurance company. Beyond that, we also deliver the data over to the autonomous vehicle community as well, and all that's around reducing the broader risk. And so in some sense, taking that control out of the hands of the human and putting it in the hands of the machine on the premise that the machine can better reduce the risk than the human. But we're a long way away from there. I don't know that I have a good answer, honestly, beyond that, other than like that driver version of the healthcare market.
So what I would say to answer your question, I think with the more data that is coming in addition to all the privacy, I think the insurance industry is getting to a point where it can get to a much more granular pool of risk. So I think the way we look at risk is sort of very gross, very high-level categories, 4 or 5 categories, and we slot people there. Various reasons for that, partly regulatory as well. If you compare where we are probably where the credit card industry was 25 years back, before we started slicing and dicing the various segments to get very precise in the risk and offer various products. Just to give an example, in another market in South Africa, there is a company which basically gives, if you have AIDS, it's very difficult to get life insurance cover anywhere. This particular company basically goes after just AIDS patients. And because they go after the AIDS patients, they just don't give the life insurance cover, but it is a managed program, so you get into the managed program. As a result, they have collected far more data around AIDS, and they are able to slice and price it appropriately. Now, having gone from AIDS, they have gone into stroke, diabetes, and very specific instances, and offering life insurance coverage for those types of risks. So that's what I think we'll get into in the life insurance space. Cancer, for example, I know it's not a terminal illness anymore, it's more chronic. So people still live 5, 10, 20 years. So we'll start getting more into risk classes which we haven't underwritten before, I think.
Other questions?
Okay, I have a question I call sort of a general question, and particularly aimed at Evangelos, but the rest of you feel free to answer. You talked about why the time is right now for artificial intelligence, that in the, I think, late in the 90s, folks thought it was coming and it was a little early. Question is, what are the risks to moving forward now?
Well, the major risk is, again, the overhype. So we need to understand what can be automated and why, and automate it. And let me give you again an example from the autonomous vehicle space. Autonomous vehicles experiments started in the 1960s. And 60s, 70s, 80s, we had various industrial and academic labs providing examples of increasingly autonomous cars. Then in 2002, DARPA started its first Grand Challenge program, and it was around autonomous vehicles. So it conducted 3 competitions between 2004 and 2007. But it wasn't until 2009 when Google started its autonomous driving program that everything fit together. And the everything fitting together meant that there was the computing power had become big enough and small enough, big enough in power and small enough in size that can fit into a vehicle. It meant that we had small enough sensors that we could power with the power that we had on board the vehicle. We had accurate enough maps that could be used by the vehicle to navigate itself. So the point that I'm trying to make here is that similarly for every one of these processes that we will look to automate, we need to understand whether this is the right time to automate them, whether, in other words, the technology that we have, the understanding of the process, the technology that we have, and the data that we have are at the right level for this automation to be successfully accomplished.
You know, I'd also say just for us, it's going to be an experiment, so no one's just from principals just diving in and then understanding what happened. And Evangelos said this in his presentation. You know, I think it just gets back to if you only look at it from your angle of specialization and you're not looking at more broadly, that's when you're going to have risks come up that they're not going to be the unintended consequence. So I think as you work through that, you really do have to look at it holistically and understand the cross functions and the implications it may have on your consumer as well as the regulators in how it's adopted and how it's perceived.
What I would also add, one of the risks in addition to the hyping, is I think we need to build the trust in these AI systems. And they need to be transparent in terms of how they interact with us. I think that those two are going to be key. And that's why I would go with what you're saying in terms of we need to take this adoption slowly so that we as individuals and as society feel comfortable that we can hand over control, if at all possible, to these machines, right? This is where I would separate automation from augmentation. I know you mentioned it in the talk. Automation to us is where the human is not in the loop. It is very routine tasks, manual tasks, maybe some of the cognitive tasks which are more lower down the line. Those are all being automated where we are confident that if you're typing in a piece of information from a PDF document into your screen, we can be reasonably confident that we can enter that information accurately these days, right? So it's those type of automation which we can do now. Everything else, I would put it under the bucket of augmentation, where what we mean by augmentation is the human is still in the loop. So you might have the AI understand the underwriting, maybe divide it into different classes, but it just still goes back to the underwriter to say hey or nay, right? And that mode needs to operate for a while we all feel comfortable, the regulators feel comfortable that these are things that are being tried, tested for a while before we can essentially say, remove the human in the loop, we know what is happening. And the same thing would happen with autonomous cars, as Evangelos said, it'll be there in 5 years, but not everyone will be fully operating in the autonomous mode for quite some time after that.
Can I follow up on that? The comment that was just made about when we remove the humans from the loop, can we look ahead, pick 10 years, 15 years, 20 years, I don't even know what the right time frame is, but describe to me what the underwriting process looks like in an insurance company and how involved human beings are.
Well, I'll start, and I think that's to be determined. I don't have that vision, and for us, we're just starting to learn more about how to do that. I think go back, though, in the underwriting process, we're using information, have been using information every day to make a decision. And if you looked at our GIA cohort view inspection, what are they doing? They're trying to look for the risks that are unseen. So the more information you get, the better decision you can make in that underwriting process. I think one of the things that our underwriters at times spend is trying to gather more of that information than using their intelligence to make that decision. So it probably goes back to that repetitive task. If we can remove that, they'll spend more time analyzing and making an informed decision. I think some of the less complex risk, you could see more of that being automated, but the higher complex is where you're going to want that human interaction. In the foreseeable future, when you talked about how long, we're just starting that journey. We see more of that happening in, starting to dip our toe into it in a couple of years, 5 years, 10 years. I don't know what it's going to look like. I think there's just still more technology advancements that I can't predict that.
Let's take one more question before we pass to Mark for the concluding remarks of this session.
Does anyone have a burning question out there? All right, then I have two questions, and I'll let you pick which one to answer. The first one is a regulatory question. The NAIC, National Association of Insurance Commissioners, has a big data task force that is looking at whether data vendors should be examined and regulated. Do you have comments on that? The second question is, we've been talking a lot about, kind of in the context of a developed market. Can you talk a little bit about what's happening in developing economies with respect to artificial intelligence, given that many insurance companies operate on an international basis? So go ahead and pick one.
Go ahead.
Interesting questions. Developing companies, I'll just have the following thought. So people wanted everyone in developing countries to have phones. It's really expensive to put poles and wires, so it all went cellular really fast. So you have certain countries that had cellular everywhere before it was necessary or predominant, and other more developed places. So I think you, as an insurance carrier, and I'm not one, you have to almost kind of look at it that way, right? What tech could be used to facilitate getting better analytics that can reduce your risk?
Actually, let me
go for it.
So to this point, we have recently funded a company out of San Francisco that operates in Africa. And they are actually in the risk assessment for financial models as opposed to insurance models. And they are collecting 50,000 points per individual, points that are getting through mobile phones, smartphones. And they have been able to develop brand new models. And now we're seeing European banks primarily that want to, or either they're operating in Africa or they want to operate in Africa, approaching them to start using their risk assessment models, because they are finding that their own models, the incumbents' models in other words, are too restrictive for the reality of the market. So I think I see a lot more of that now happening. We also saw some companies in Southeast Asia that are using this kind of approach. Guys, I'm going to, Louise, did you have a final comment? Okay.
I think in some of the developing nations, there's regulatories about who can give advice and how advice is given. So some of those countries are already putting in some regulations, but much like what you said, there is a growing number of the middle class people that want coverage, and how they go after it, they're going to use digital capabilities because that's how they're interacting. So I think some of that is there, but you're going to have to depend on the country as well of how far can they go in using those digital capabilities as well.
Well, thank you very much, and help me thank our panel for their contributions here. Thank you. And with this, I would like to ask now Mark to come stage, to Mark Montgomery from Grinnell College, to give us the concluding remarks for this session. Thank you.
Okay, I will try to be brief. I'm in a profession not known for its brevity, but I'll do what I can. I am easily replaceable by a series of short YouTube videos, and I'm conscious of that every time I go into the classroom. One of the things I do in the classroom, I teach an environmental economics class, and one of the things we do in that class is we talk about population. And if you know anything about human population, if you look at the way it's been growing over the last 100 years, it's alarming, really. Since the beginning of the Industrial Revolution, that's what we're talking about, right? We're talking about industrial revolutions here. Since the beginning of the Industrial Revolution, the population grew pretty slowly to about 1890, and then it turned up like this, and it shot up. And I tell the students that, you know, every place in the world seems to be getting more crowded, but where you sit in Iowa, in Powesheck County, which is where I teach, is not getting more crowded. In fact, Powesheck County, Iowa, had 18% more people in the 1900 census than it did in the 2000 census. So this, where you are, not where you are in this immediate county, but where you are in this state, has been utterly transformed by an industrial revolution. We have about 99 counties in Iowa, and maybe 93 of them are losing population. So, you want to talk about the effects of an industrial revolution? In 1900, about 40% of the workforce was on farms in agriculture. Now that number is about 2%. That's a tremendous change. That's an astonishing revolution. If you had told people in 1900, look, we're only going to need about 1/20th of you, and we're going to produce food for, well, maybe 5 times as many people, and they're going to eat actually better than you do now, people would have wondered, how is that possible? If you'd gone back to the first industrial revolution and you told people that over the next 200 years, the population would go up by a factor of 7.5, but that almost every job you know of will be gone to be replaced by machines, you know, people would have asked themselves, what's the unemployment rate going to be in the year 2017? 90%? How could it not be? But of course, we know something about these revolutions, right? Industrial revolutions are great. They do wonderful things. They transform life. They make everybody more productive. And it's only through higher productivity that we enjoy higher standards of living. The standard of living in the course of human history changed hardly at all from 5000 BC to about 1800 AD. It simply didn't change very much. Now it's changed dramatically. So in the long run, industrial revolutions like the artificial intelligence revolution are good things. In the long run, everybody's better off. But, you know, as John Maynard Keynes, the famous 20th century economist, said, in the long run, we're all dead. So, you know, it's not really that much comfort to know that in the long run, the AI revolution is going to make things different. And it's going to make them so different that everybody will be better off. Because that is cold comfort to people whose jobs will be lost. And if you look at the transformation of the American industrial labor force over the last, well, let's say the last 30 years, you notice that since the 1970s, even though more people are getting wealthy and there are a lot more jobs and a lot higher wages, the people at the bottom of the ladder, the people with the least skills, are not improving. In fact, their real wages have fallen over the last 30 years. So again, it's a great thing for somebody. It's a great thing for most people, but it worries those people who are going to be left out in the cold. Well, there was a response to the great agricultural industrial revolution where all of a sudden agriculture was mechanized, and it was what is called now the high school movement. And it was uniquely American. When we were losing all of the jobs on the farms and we were industrializing in the cities, the American public brought in a system whereby everybody had free access to high school. And you could go 12 years of school, from kindergarten or from first grade all the way on, without paying for it. And not only did you have that opportunity, in a sense you were required to, because the high school movement started requiring that you stay in school to about 16. It varied from state to state, but the requirements to stay in school were much longer. And the remarkable thing about the high school movement is that unlike what the Europeans were trying to do, which is to train people for certain jobs that were coming, high school movement didn't do that. High school movement was really about about general education. It was about reading and writing and arithmetic. It was about teaching people how to learn. And I think the lesson from this for the AI revolution is that it might be a mistake for us to anticipate what kind of jobs are going to be coming along and try to change our educational system so that we train people for those jobs. Because the fact is, we don't know what kinds of jobs are coming along. As you heard from this panel, people are coming up with new ideas that create new jobs that simply were not anticipated 20 years ago. I'm older than most of the people in this room, and I remember back in the 60s, they were threatening us with the new math. We were going to have to learn the new math. I don't even remember what the new math was. I think it may have been octal, where you, instead of decimal, where you have a system based on 10, it was based on 8, because 8 is 2 to the 3rd power, and computers, you do a lot of their work based on, binary too. I have no idea what the hell it was. I didn't learn it. But the point is, we were going to have to do that, and we had better be prepared. So again, our response to the Industrial Revolution that gave America an edge in development, an edge in leading the world in new technology, was a general educational response. Now, so what am I saying that we should have more general education? A guy from a liberal arts college is standing here up touting general education. I mean, what do you expect? And you should never believe anybody who's up at the podium suggesting that his industry is more important than others. So I wouldn't take that to heart too much. But I do think it suggests that education is going to have to be in some part of this response. The difference between a high school education and a college education at midlife now is something like 60 to 80%. The high school wage disadvantage has just grown. And if you're less than high school, it's much, much worse. We know that for some reason we are leaving people behind in this industrial revolution that we're still enjoying. And artificial intelligence may make that even worse. And we are going to have to think about how to change the industrial educational complex to meet those challenges. I don't know, however, that it's a good idea to think about curricula. I don't know if it's a good idea to start making certain kinds of schools. And as a matter of fact, to tout an industry that is not mine, but that is educational, there's a lot of evidence that training adults has a much lower rate of return than you might think. There's a lot of evidence that pouring money into schools has a lot lower rate of return than you might think. And there's a lot of evidence that pouring money into the other end of the educational spectrum, to early childhood education, has a higher rate of return than you might think. I don't know what the solution to this problem is. I know in the long run it's not a problem, and I know that in the short run it could cause all kinds of mayhem in the lives of people who don't deserve to have their lives turned down. And I think what we're going to end up doing in response to the AI revolution is to do more of what we ought to have been doing anyway. That is, strengthening elementary school, maybe making school available earlier to children, to trying to figure out a way to get people to college right now who aren't going to college, and to just, in general, think about how you've got to make people educated to address the challenges of an industrial revolution, which is exactly what we did the last time. Thank you. I do want to say that if you want more information on artificial intelligence, you have a handout that will direct you to a website that does that. And I also want to thank my employer and Grinnell Mutual Reinsurance for sponsoring this topic. Thank you.
Thank you very much. That was terrific, very interesting, engaging, thought-provoking. We're going to take a break for 15 minutes and be back. There are snacks outside, I'm told, so we'll be back at about, let's call it 4:15, 20 minutes. You can take a longer break. Thanks.